Hi, folks. This is Chris Ye, the co-author of Blitzscaling. I'm delighted to have you joining me for today's webinar. We're going to take a couple of minutes to give folks the chance to filter in, but for those of you who actually showed up on time, we'll provide as a little extra benefit some background. You may be wondering what's going on in the background. Well, it turns out that on June 30th, I ruptured my Achilles tendon. Those of you who are fans of professional basketball in the United States will know that this is the same injury that has affected all-stars like Kevin Durant and DeMarcus Cousins, John Wall, and before that, the great Kobe Bryant. And it is a difficult injury. I was able to get surgery on July 2nd, so about 2.5 weeks ago, but I am still unable to walk. And I get around with the aid of my trusty crutches. So I am actually stuck here at home for the next month or two, which means I was unable to join you from an office. However, you will get a chance to see some of the lovely artwork for my kids' birthdays early on. And if we're especially lucky, we may even get a chance to hear the barking of my dog, Misty, if the UPS truck arrives. But despite all that, we'll be able to go through, give you a great overview of blitzscaling, and hopefully answer a bunch of questions along the way. Now, if you are interested in asking questions, we have the webinar chat. You should feel free to chat. I see everyone telling us where they're coming from. Tommaso from Rotterdam, for example, who's going to come to the bootcamp in September. Fantastic. Feel free to ask your questions at any point. We'll be holding all the answers to the questions to the end and working with the MIT team to sort of select the questions. We'll try to get to as many of them as possible. It's also the case that at various points in time during the presentation, I may ask you guys to go on chat and provide some responses, answer some questions, basically guess at a few different things. And the people who guess correctly will, if they come to the boot camp, get their, of course, personally signed and inscribed copy of Blitzscaling. So I definitely hope that I'll be seeing you guys in person to sign those books for you. At any rate, it looks like we are now a couple of minutes in. So assuming that I get the thumbs up from the crew at MIT, I think I might go ahead and get started. Have I got the thumbs up?
Yes, you can go ahead.
Perfect. So again, welcome to today's webinar, giving you an overview of blitzscaling. I'm Chris Ye, and along with my friend Reid Hoffman, we wrote this book, Blitzscaling, that we feel like really describes the way the world works today. And what I'm going to do in this talk is give you a quick overview of the core ideas of blitzscaling, both how it applies to startups and a little bit on how it applies to more established companies. And then we'll open it up to Q&A, and you'll be able to ask questions of me, and you'll be able to ask questions of the MIT team and of Jeff Abbott, the co-founder and CEO of the Global Scaling Academy, my partner in bringing the ideas of blitzscaling to the world. So let's go ahead and get started. For those of you who are entrepreneurs, I'll ask you this. Would you be interested in learning how to increase the size of your startup by 50 times in terms of the number of employees, by 94 times in terms of the number of customers, and by 322 times in terms of revenue in the span of 3 years? Now, those numbers seem absurd. How can you possibly grow a company this quickly? And yet these are real numbers based on a real company that grew at this rate from 1996 to 1999. So, first interactive question, which you can answer in the chat. Which company was it that showed this kind of growth? I'll give you a hint. It's a very famous company that most of you have probably used this week. Erwin guessed Amazon. He is 100% correct. Got it in one. I love it. This is a highly educated audience. Let's talk about Amazon. In fact, Amazon grew from 150 employees to 7,600, from 180,000 customers to 16.9 million, and from 5 million in revenues to over 1.6 billion in revenues from 1996 to 1999. And it's that growth that transformed Amazon from a small online bookstore into a global e-commerce giant. And of course, it's grown a lot since then. One of my standard jokes is to say that one of the few things that has grown more than Amazon are Jeff Bezos's biceps, because we're going to see a picture of Jeff from the earlier years, and you'll see he's much smaller during that time. It's this new thing among Silicon Valley moguls and tech moguls. They seem to really like to pump up these days. Any day now, we can expect Mark Zuckerberg to start entering bodybuilding contests. So if we are able to grow companies at this incredible rate, and this growth helps these companies become global market leaders, the main question is, how on earth do we do this? So in order to answer this question, Reid Hoffman and I decided we are going to look at data from around the world, because this is not just a Silicon Valley question. This is a global question. And we looked at companies that were $100 billion companies. That is, companies with a market cap of over $100 billion. And we found companies like Alibaba and Tencent in China, SAP in Europe, and of course Amazon, whom we just discussed, and Microsoft, as well as IBM in the United States. However, what is missing from this equation is the companies that are headquartered in Silicon Valley that meet this criteria, which are pure play technology companies with a market capitalization of over $100 billion. So second interactive question, you'll notice that we have 7 of these companies in the rest of the world. How many of these companies do you think can be found in Silicon Valley? This is going to be a number. And for those of you who have ever seen The Price is Right, we're going to use the Price is Right rules, which is to say the closest without going over. So Fayez come right out of the gate with 11. That's a great initial guess. Who else wants to play? See what other numbers can come in. You know, I always can tell how many people have watched. Look at that. There's an 8. So one of the things that people do in Price is Right is they do things like, 0. Ben guessed 0. Very smart. He's like, I'm going to cover the under. And now I'm waiting for someone to guess 12. I'm sure someone's going to guess 12 as well. That would also be a power move, so to speak. The Price is Right is a very famous game show in the United States. It was hosted by Bob Barker and is now hosted by Drew Carey. And it's one of those funny things where you wouldn't think it would be that interesting to see people guess the prices of consumer goods, and yet it has been on the air continuously for decades. It's still one of the most popular game shows in the United States. So, looks like we've gotten enough guesses in. Let's reveal the answer. And at least, again, from day to day, this changes depending on the market capitalization of Salesforce.com. 1, 2, 3, 4, 5, 6, 7, 8, 9, or 10. So I am going to go ahead and declare that Andrew is the winner because he was the closest without going over. Fayez, you were very, very close. And it is absolutely the case that I think if there had been better IPO performance from Uber or certain other companies, you might very well be there. But really great set of guesses, folks. And 11 is super close right out of the gate. And so the real question is, this is kind of strange because Silicon Valley is actually a pretty small place. There's about 4 million to 7 million people, depending on how you count the area of Silicon Valley. And the vast majority of those people are not in the technology industry. So we have this tiny little place that is responsible for a majority of the most important, most valuable technology companies in the world. And the question is, why is that? Now, what happens is people often think of Silicon Valley and they say this is a great place to start companies. But that's wrong. There's a lot of great places to start companies all around the world. And in fact, many of you hail from places that are great places to start companies that aren't Silicon Valley. Boston and Cambridge are a great place to start a company. Austin, Texas, Stockholm in Sweden, Sao Paulo in Brazil, Berlin, many, many great places around the world to start companies. But what sets Silicon Valley apart is that it is a great place to scale companies. And Silicon Valley and China are the places where you can most effectively scale companies. And what we want to do is we want to look at these places and understand what are the things that allow them to scale so rapidly and to build enduring market leadership. And surprise, surprise, the answer is we found blitzscaling. Now, when you're an author, one of the most important things you can do is to go to Google, make up a new word, and find something that no one has used before. Because that way you can get a trademark on it and make a lot more money. And so Reed and I were able to come up with this term blitzscaling, which is a unique term that nobody had ever used before. It is now very heavily in use, I am happy to say. Although a lot of times people don't really understand what it means. A lot of people think that blitzscaling just means spend a lot of money. And the actual answer is far more nuanced. As you can see, we're talking about the pursuit of rapid growth by prioritizing speed over efficiency in the face of uncertainty. And pursuing rapid growth is not particularly controversial. I have yet to meet an audience where people said, I would like my startup to stagnate until it eventually dies. Everyone wants to grow. But it's that second part, prioritizing speed over efficiency in the face of uncertainty, that's more controversial. After all, that seems like it's very risky. It seems like it puts the business in danger. And so the question is, why would you want to do this? And to answer it, we're going to do a quick little case study. But first, let's talk about the blitzscaling as a function of speed and uncertainty. So one of the things I learned when I was in business school at Harvard Business School is that everything in the world can be put into a 2x2 matrix with whatever is good in the upper right-hand quadrant. Everyone already knows, go to the upper right-hand, that's the thing that's good. But it's a little mysterious when it comes to blitzscaling. So if we look at this matrix of certainty and uncertainty, speed and efficiency, most companies are going to start in the upper left-hand quadrant. Right? You're starting a company, there's a lot of uncertainty, and so you're going to bootstrap. You're going to try to spend as little money as possible and be as efficient as possible. This is where the concept of having a minimum viable product comes in. It's not because doing a minimum product is better, it's because doing a minimum product is more efficient and faster. Assuming that you do that and you say, wow, it looks like we're getting a great reception, you might go down to the lower left-hand column and lower left-hand quadrant, start scaling up. You've got some certainty now, but you're still acting out of efficiency. This is the way people think of growing a business. We're going to grow it out of cash flows. We're going to grow it out of revenues. Assuming that they're in a hot market and investors are happy to provide resources, they might then move over to the right lower quadrant of fast scaling, where there's a lot of certainty and they're able to raise a lot of money. And this is a great place to be. Right? If you know that for every $1 million you spend, you can bring in an additional 5 or 10 million in sales right away, Wall Street is happy to give you as much money as you want. Institutional investors are happy to give you as much money as you want. But what allows companies to really differentiate is blitzscaling. And it doesn't make sense because why would you take on that additional risk of speed when there's uncertainty? And the answer is that it really is a question of competition and market dynamics. Now let's take a look at that case study. Back in 2002, the early days of the internet, Google was at the time a fairly young company, privately held company that did search on the web at google.com. And they had just begun to develop their Google AdWords product. So everyone's probably familiar with Google AdWords. You're next to the search results, there are those little advertisements, little text links and text ads that you can click on. And when you click on them, Google makes money. Now, this was not something that was new. It was actually something that they stole from Overture. And in fact, they ended up paying Yahoo, who acquired Overture, a large sum of money at the IPO in order to settle that particular patent dispute. So Google took somebody else's patented business model and began deploying it. And because they had started to monetize, they decided that they wanted to increase their business, and they reached a partnership with AOL, which at the time was the most powerful company on the internet. It was how people accessed the internet. And so it had an enormous volume of search. And the deal was that Google would power the search results for AOL. They would sell the ads against those search results, and 85% of that revenue would go to AOL and 15% would stay with Google. Now that's already a very generous allocation because back in those days in the online advertising world, it was very common for the advertising network to keep 30 or 40 or even 50% of the revenue. And here's Google only keeping 15%. In addition, Google guaranteed $150 million a year in minimum payments to AOL for the length of the deal. And it was a multi-year deal. So this was effectively a $500 million commitment. I want to point out that at the time, Google had less than $15 million in the bank, and they had revenues of less than $20 million. And they had competitors who were publicly traded. And oh, by the way, at the time, the stock market was also crashing. So for those of you who have ever dealt with a board of directors, I want to picture yourself walking into a boardroom. There's these famous board members, John Doerr, all these folks, very famous investors. And you go to them, you say, I've got this incredible deal with AOL I want you guys to sign off on. You can imagine that the reaction would be, I don't know, it seems like it's a really generous deal. It seems like we're taking on a lot of risk. I mean, guaranteeing $150 million a year when we have 15 million in the bank and our revenues are 19 million, that seems insane. And yet, of course, we know Google did not go bankrupt. In fact, this deal is the deal that helped put Google on the map because the year before the deal, they had generated revenues of 19 million. And the year after the deal increased their revenues to $347 million. And remember, that $347 million is based on the 15% share. It doesn't count all the ads that they sold where the revenue went to AOL. And this is something that really, again, took Google from a small privately held company into a company that was already on track for an IPO and, of course, went on to enormous success. Now, was this just a gamble, a roll of the dice? No, and that's the key with blitzscaling. It's not just a roll of the dice. It's a key case of, can we figure out whether the circumstances are amenable to this strategy? And there were a couple of reasons why this made sense for Google. The first, of course, is it's an enormous market. There was a huge opportunity and upside. It had already been proven by Yahoo that it was possible to build on top of a search engine an incredible multi-billion-dollar business. And so Google knew it was playing in a big and valuable market. The second is that it obviously had incredible network effects. And here's what I mean by this. Google has a core technology called PageRank that determines the relevance of different things. That's how they find the best web pages for you when you search. PageRank also works for the advertisements. And so Google was able to perform a twist on the Overture business model. Overture just showed the ad of the highest bidder. Google looked at the ads, ran the ads, figured out which ads were most likely to be clicked on, looked at the amount that the person bid and said, what is the ideal combination of bid and relevance in order to get us the most revenue? And this would tend to reward the advertisers that delivered more relevant ads, which made in turn the search engine more relevant for the users, and in turn allowed Google to make a lot more money. In fact, they had a monetization advantage over their competitors. And by running all this volume through their algorithms, they're able to make their algorithms so much better that nobody else could compete. Finally, AdWords is a two-sided marketplace, which means that the advertisers are attracted to where the greatest volume is, and the publishers who provide that volume are attracted to where the most advertisers are. Two-sided marketplace. And as a result, there are really strong network effects that tend to make it a winner-take-most or winner-take-all market. And Google, by doing this AOL deal, launched itself to the front of the pack, became the market leader, and that is a position it maintains to this day. In fact, if you look at the online advertising market, it is almost entirely dominated by Google and Facebook. They represent all the growth in the market. Everyone else is actually shrinking relative to Google and Facebook. And this is because they are blitzscale businesses in huge markets with strong network effects. So let's talk about like the actual way you decide if your company is blitzscalable or not. So we talk about the growth factors of blitzscaling. So I mentioned some of them in passing with Google, but let's dive a little bit deeper into these. The large market or big market is something that is obviously quite relevant. If you're going to take on all this risk, you need to have a massive prize on the other end. But what's interesting to note about the market is it's not just about the present market, it's about the future market. When Uber was starting up and was starting to get some press, there was a famous professor at NYU, a finance professor named Aswath Damodaran, who did an analysis, very careful, mathematically correct analysis, that showed that Uber could never be worth more than $1 billion. And the analysis consisted of looking at the size of the global taxi market, which was approximately $100 billion, estimating that Uber might capture 10% of that market, estimating what Uber's gross margins might be on that 10%, and doing a discounted cash flow analysis. Now, we all know that Uber is worth a lot more than $1 billion. What do you think was wrong with Professor Damodaran's analysis? This is another one of those interactive questions I'd love you guys to answer in the chat. What do you think was wrong with Professor de Moderon's analysis? Why do you think Uber ended up being worth more than $1 billion rather than the $1 billion that the analysis would suggest? So Erwin says market forecast. Absolutely, that's correct. Samir says he didn't account for the growth in the market. Absolutely. And these two together are, I think, the absolute right answer. So Uber is not in the market of taxis. Uber is in the market of mobility. It ended up being much bigger than taxis. And I can tell you that I've taken Uber or Lyft or equivalent company far more often than I ever took taxis in the past. The only time I took taxis in the past is to get to and from the airport. And half the time I would go and park in an airport parking lot. I'm old, so I actually remember these things. And in contrast, by making the ride-hailing system so easy to use, so low cost and so convenient, it dramatically expanded the market. And so when you're thinking about the market, you have to think about what is the future market? How is my product going to expand the market? Next is massive distribution. So a lot of people are really focused on the product. Lean startup, MVP, product market fit. Product market fit is absolutely very important. We'll talk about it later on. But more important than product market fit is your ability to get distribution. The point of blitzscaling is to dominate a market where market leadership conveys major competitive advantages. And the only way to get to market leadership is through distribution. Usually this distribution is going to take the form of either sitting on top of existing networks and leveraging them, or virality. The world that we live in today, where people are totally interconnected, allows viral growth to really spread. And we see this. I mean, once upon a time, it was a big deal if something went viral. And it went viral because people shared it via emails. If you've ever seen the greeting card, the holiday video that eventually led to South Park, this was one of the first viral hits. The creators of South Park were hired to create a holiday greeting card. They did it with their paper animations. It's called The Spirit of Christmas. I'm sure you can find it on YouTube today. And it was a short video that featured Santa Claus and Jesus fighting each other and Kenny dying and all these different things. And this went viral because people emailed it around. There was no YouTube. There was no video hosting. Think of the friction involved in spreading something like that. Somebody having to send a giant file attachment, people having to download something that at the time, there's my dog, Misty, she's a very cute dog, something at the time would have taken minutes to download before you could even watch it, and yet it spread. So what today's networks and broadband and everything else have done is to make distribution so much more potent and make virality so much more potent. Yes, so there's a quick question. I'm just going to respond to a question because it's an important one. Can we get a copy of the slides? The answer is yes. You can absolutely get a copy of the slides afterwards. That's not a problem. Next up is the high gross margins. And high gross margins are important because they're how you fund growth, right? The more money drops to the bottom line from the top line, the more money you have to find growth. And by the way, the more valuable your company is, the bigger the results and rewards of success are. And high gross margins are super important because the customer doesn't care. I often tell people, have you ever said, I'm going to go and eat at Burger King instead of McDonald's because Burger King has lower gross margins and therefore more of my money is going to the food? Nobody cares. It's all about, what does that product actually do for them? Do I prefer a Big Mac or do I prefer a Whopper? And so you might as well engineer the best gross margins that you can because your customers don't care. It's all about the value they receive, not the bargain that they're getting. Next up, network effects. And network effects are probably the thing that contribute the most to blitz scalability, because a market is blitz scalable when it's massive, when there's distribution, when there's high gross margins, when it's hugely valuable, but most importantly, where there are long-term competitive advantages to being the market leader. And most of the time, these competitive advantages come from network effects. So for example, if you think about businesses like eBay or Craigslist, these are businesses that really have not changed very much at all. In the case of Craigslist, they really, literally haven't even changed. They don't even have graphics to change. It is the same website with a gray background that it was in 1997. So it's over 20 years without a change. But because of the power of the network effects of being the marketplace where the two sides come together, they have been able to stay market leaders despite doing almost nothing to maintain that leadership. Now, I'm not saying that that's what you should do. I'm not saying you should take 2 decades off and just collect checks. But what I am saying is that achieving those kinds of network effects gives you the opportunity to do that. And you could, instead of just taking the 20 years off, use that to go into adjacent markets and make your company even bigger. So those network effects are very powerful. There are certain other ways that blitz scalability comes into play. Sometimes there's a land grab element of it. The biggest danger of land grabs is that land grabs do not always represent long-term advantage. So let me give you an example. In the United States, one of the big revolutions of the 2000s and this century has been shale oil and gas production. And that is because of two new technologies, horizontal drilling, which allowed drills to go sideways in addition to up and down in order to reach deposits of oil and gas, and fracturing or fracking, hydraulic fracturing, which allowed people to access different kinds of deposits that were never accessible in the past. And what happened is, and the reason this is a blitzscaling story, is because mineral rights are handled via 99-year leases. So essentially, as an oil or gas exploration company, you go and you find somebody who owns land and you buy the mineral rights to that land for 99 years, which is essentially a monopoly. I mean, it's basically forever because we don't even know what's going to be happening in the world in 99 years. But that is a legal monopoly over all the oil and gas in the ground. Now, what happened was companies like Chesapeake Energy, which realized the power of horizontal drilling and hydraulic fracturing faster than the other companies, went out and deployed an army of agents to buy up all the mineral rights. And because people thought all those mineral rights were worthless, they got them at an incredible bargain. And by locking in those mineral rights at that low cost, Chesapeake Energy was able to blitzscale. Now, they're also a cautionary tale because Chesapeake Energy didn't realize how blitzscaling worked. Their strategy was simply buy all the mineral rights. What they didn't realize is that's a winning strategy when mineral rights are undervalued, but it's a losing strategy when mineral rights are overvalued. And that's why the company nearly went bankrupt. So network effects are a little safer because the network effects tend to be very dominant over time, and you don't see that sort of motion like we did in the fracturing example. Finally, product market fit. So product market fit is something that people consider very important, and I consider it important to blitzscaling as well, but it is a necessary but insufficient factor. Here's what I mean. Having product market fit will not guarantee blitzscaling success, but lacking product market fit will guarantee blitzscaling failure. And the classic example of this is Groupon. Groupon is a company that had all of these growth factors going for it. Huge market, massive distribution. I'm sure all of us have gotten Groupon emails at some point in time. High gross margins. They're giving away stuff and charging money. They're giving away other people's stuff and charging money. That's like the best gross margins you could get. Network effects, absolutely, because of the fact that it's based around a marketplace of merchants and buyers. But there was no product market fit. I often ask audiences, how many of you have used Groupon in the past 30 days? So how about it? How many of you have used a Groupon in the past 30 days? Anyone? Has anyone used Groupon? Almost all of you have, exactly, nope. Almost everyone has used Groupon at some point in time in their life, but you stopped. Why? The product experience sucks. It's terrible. You print this thing out or you have it on your phone. You have to worry about whether the person, the cashier, is going to really actually honor it or not. And are you going to look cheap in front of your date and all these different things? It's a really bad experience. And then it's a really bad experience for the other side of the marketplace as well, the merchants, because the only people who use Groupon are cheap bastards like you who would never pay unless it was heavily discounted. And so as a result, despite being the fastest growing company in history by revenues, Groupon is, even though still worth over $1 billion, largely defunct today and in real danger of going out of business. The other thing, which is not inherent to your company, but is based on the market itself, is can your competitors blitzscale? Remember, it's a race. And it's like the old joke about two friends who are in the woods and they encounter a grizzly bear. One friend starts tying their shoe and getting ready to run. The second friend says, why are you doing that? You can't outrun the bear. He says, I don't need to outrun the bear. I just need to outrun you. And so you have as a goal being the first company to blitzscale, to achieve that critical mass, that critical market share that gives you that lasting competitive advantage. If you don't have competitors, then you can take your time. You can move and grow at a more comfortable pace. But in a market where there is competition, the competitor that is able to grow most quickly, because they are the boldest, because they're the most willing to tolerate uncertainty and discomfort, will often be the one that becomes the market leader. So how do you blitzscale? Well, it's like a rocket ship. A rocket ship brings together fuel and oxidizer in a controlled explosion to create thrust and reach escape velocity. In the case of a company, you're bringing together the financial capital and the human capital in order to actually do this. And in fact, in many ways, the human capital is the more important element. It's one of the things that has helped Silicon Valley succeed. There are generations of practitioners, executives, employees who have gone through this process, who understand how it works, and therefore are available to help companies scale up and grow. And it's those human elements that tend to make a blitzscaling ecosystem successful. Now, how does blitzscaling work? As your company grows, and this is a very important point, especially for you entrepreneurs who are thinking about building amazing companies. As a company grows, each time it achieves a new order of magnitude in scale, this is expressed in terms of the number of employees, it's really like a very different company. Uh, these are phase changes. It's like ice becoming water and water becoming steam. It's not just a quantitative change, it's a qualitative change. And the biggest change you have to overcome in many cases is the transition between stages 2 and 3, tribe and village. Because above that line, families and tribes are informal structures where you as the founder and CEO are able to really see everyone else and rely on your personal relationships to manage the company. But once you cross over into the village category, now you can't know everyone in your company. You can't see everyone in your company. If you wanted to meet with people one-on-one, you could meet one-on-one with a couple of people per day. It might take you 3 months or 6 months to cycle through the entire company. And that's just not a quick enough cycle to give people the guidance they need to grow the company. So you need to become more formal. You need to bring in more structure. You need to manage the company instead of just relying on informality. And so one of the things that we do in this book, Blitzscaling, is talk about how do things change from stage to stage? How do you need to adapt as a founder, as a manager, as an executive, as the company grows? And these key transitions are outlined here. So in terms of these key transitions, I'm not going to go through all of them because we do not have the time to cover every single one. But I'll just talk about a couple of them to give you a flavor for the kind of content we're going to go over in the bootcamp and the kind of content you can find in the book. So a couple of things that are very important. Dialogue to broadcasting is one of the ones that oftentimes people struggle with. The reason is dialogue is so natural. One-on-one, like you and I are talking right now. It's technically one-to-many, but pretend that it's just you and me. It's an easy way to relate to each other. We don't have to do a whole bunch of preparation in advance. We're able to really develop a rapport, and we're able to make decisions quickly. And so dialogue is great at the earlier stages. But at those later stages, you have to make the transition to broadcasting. You have to figure out a way to convey your vision, to convey your purpose to the company as a whole. And this can take the form of things like all hands meetings. It could take the form of an email to the entire company, like Brian Chesky of Airbnb writes every Sunday night to his team. But you have to think about a broadcasting model because you need to go one to many in order to have that influence over the entire organization. And it's not something that is necessarily obvious from the start, but it is something that you have to think about if you want to blitzscale and grow your company. The other thing I'll mention is pirate to Navy. And this is a very important topic. It ties in with responsibility, which I'll cover later on. But when a company begins, oftentimes companies behave like pirates, like Steve Jobs with the original Mac team. He told them it's better to be a pirate than to join the Navy. Pirates are risk takers and they're willing to go where other people aren't. And they're the ones who explore these uncharted new lands. But as the company grows, it's no longer enough to be a pirate. Right? You're not just commanding a single ship, you're commanding an entire fleet. And if you try to command an entire fleet the way a pirate captain captains a single ship, you end up with an undisciplined mob. And the great example of this is Uber, where the founder and CEO of Uber, Travis Kalanick, was very used to managing things in a very informal way. And in fact, he told an author that his goal was to run the company like it was a small company, and that his role as CEO was to be troubleshooter in chief. Now, when you have a 10,000 person company, that is absurd. You can't run a 10,000 person company the same way you run a 10-person company. And as the CEO, if you're troubleshooting at a level of a 10,000 person company, unless that trouble is an existential threat to the company, you're doing it wrong. Your job at that point is really to be able to set the structure so that the individual captains within your fleet can figure out how to troubleshoot those issues and make the gains on the front lines. You're no longer on that front line. And so that pirate to Navy transition is one of the key things that you're going to need to be able to go through. Um, Finally, I'm going to talk about the counterintuitive rules of blitzscaling. As we've seen, blitzscaling itself tends to be counterintuitive. We're talking about doing things like, prioritize speed over efficiency. And once you go down the rabbit hole of prioritizing speed over efficiency, doing things in a counterintuitive way, you need to do other things in a counterintuitive way. Now, this one, again, I don't have time to go through all of them. They were all covered in the book. We will cover them all in the boot camp. But audience participation, what I'm going to allow you guys to do is to pick which 2 or 3 of these I'm going to cover. So take a moment now, and in the chat box, tell me which of these you want to cover, and it's going to be first come, first served. Let fires burn, ignore your customers, and maybe one more, culture. All right, perfect. So we're going to cover let fires burn, ignore your customers, and evolve your culture. And again, for those who are missing those other ones, these titles are intended as clickbaity. They are provocative by nature. People love to hear about them. So let fires burn. Let fires burn can be thought of as the master counterintuitive rule. And the reason is that when you are blitzscaling a company, there is so much going on that there is no time, no energy, no resources to cover everything. Those of you who are entrepreneurs probably recognize this. If you're an entrepreneur, I assume that you don't go to bed at night at 10 p.m., nice and early, thinking, I finished everything for the day and tomorrow is a new day, and then there'll be new challenges and I'll cover them then. Instead, you're falling asleep at 1 or 2 a.m. thinking, oh my God, how am I ever going to do everything? The answer is you can't. So to use the metaphor of a ship, again, a wooden sailing ship again, you're in battle, you're firing your cannons, and as you look around on your deck, you're seeing all these fires that are burning. And you don't have the water or the time to put them all out because you got to keep firing those cannonballs. You have to repel borders. You have to do all these different things. And so let fires burn basically says you have to get really good at triage. You have to get really good at saying, this fire is going to kill me right away. I got to take care of it. That fire won't kill me for at least a month. Ignore it. And that ties in with ignore your customers. So ignore your customers basically means that the rule, the customer is always right, or that you have to always respond to your customers right away. Not necessarily the case. So let's take the example of PayPal. PayPal is, of course, a famous company that most of you have probably used. My co-author, Reid Hoffman, was a founding board member of the company and also one of the key executives at the company as it grew and eventually went public and sold to eBay. And one of the things that happened along the way is they went through a series of pivots. They went through 5 CEOs in a single year trying to find the right model. They finally found the model, which was settling things like eBay payments via email. And that ended up being the key killer app for PayPal. And once they got to that point, the company was growing 2 to 5% a day. Now, that's pretty incredible, right? Not per week, not per month, per day. And because it's software, stuff goes wrong with software, some of the transactions didn't work, and so some customers didn't get their money. Now, if you are playing Angry Birds or Candy Crush and the game freezes up on you or something goes wrong, you get a little pissed, but you say, well, I guess I'll start the game over. If you are waiting for money and it doesn't show up, you don't just sort of say, I guess it didn't show up, oh well. No, you get pretty pissed and you say, give me my damn money. And if you were a PayPal customer and you want to do this, you would quickly discover that there was no customer service line and that there was just a customer service email and that you didn't get a response very quickly. Now, the reason for this is that at this point in time, PayPal was receiving about 200 emails a day, 200 customer service emails a day. They had a total of 2 customer service people that could handle about 25 email responses a day. And so they were getting 200 in and 50 getting resolved, which meant that every week more and more were being added to the backlog, and responding to customers was taking longer and longer and longer. These customers, because they weren't getting response from email, would look up the white pages listing of PayPal. There used to be a phone book. There used to be these things called white pages where you listed the various companies. They'd look up PayPal's number and call the number. Now, PayPal didn't have a receptionist either, so they just got voicemail. But they had one of those voicemail systems that said, if you know your party's extension, you may enter it now. And so those angry customers would randomly enter extensions 1, 2, 3, 4, and so on and so forth, trying to get a mailbox. And enough of those people did that, that every single phone at the company was ringing 24/7. If you picked it up, there was an angry customer at the other end. What do you do about that? Well, you could hire a bunch more customer service people, or you could reduce the rate of growth, throttle the growth, don't allow people to create new accounts. Or you could say, we're going to have people who are currently working on other things work on customer service instead. But all of those steps, all of those options would require the company to slow down. So what they did instead was unplug the phones and say, you know what? Everything's growing. And the more important thing is to achieve scale and to be the leader than it is to satisfy these customers. In order to better satisfy our future customers, we're going to ignore our current customers. And it in fact worked. And after they'd achieved some of their growth goals and raised a gigantic round of financing, they ended up going to Omaha, Nebraska, hiring 100 people in a single weekend using mass interviews, putting them in an abandoned call center, and putting them to work on responding to all those customer service problems. And very quickly, about half of those people quit. But fortunately, Omaha, Nebraska had a lot of people. They were able to hire more people. And today there are thousands, I think about 5,000 PayPal employees handling all the customer service. And they're all based in Omaha, Nebraska. So that's an example. Ignore your customers doesn't mean ignore them forever, but it does mean don't just reflexively respond. Think about what you're doing before you do that. Oops, sorry. Finally, evolve your culture. The important thing to remember about a blitzscaling company is how fast it's growing. A typical company might grow at 10, even 15% a year if it's a high growth company. A blitzscaling company might be tripling every year or more, and tripling in headcount every year or more. Now, when a company grows like 10 to 15% a year, people can pick up the culture by osmosis, and it may largely remain the same because at the end of the year, 85 to 90% of the people were there at the beginning of the year. So it's just carryover. But when your company is tripling every year, at the end of the year, the majority of people are new. And so your culture can drift extremely rapidly. Then evolve your culture as a response to that. First, you need to be intentional about your culture. You need to understand that culture has to be very clearly expressed when you have a company that's growing that fast. Otherwise, it's just going to randomize and you may not like the results. But second, you have to have the humility to understand that the culture we had at 10 people is not going to necessarily be the same culture at 100 or 1,000 or 10,000. Right? Your culture is going to evolve based on the people you're bringing in. And rather than being slavishly devoted to maintaining the culture as if it were a museum piece, instead, you should be thinking about how the hires you bring in can evolve your culture, can add to your culture, can make it even better. Now, a couple of final points before we go to Q&A. Responsible blitzscaling. One of the things we want people to do, and one of the things that will be a part of what you learn at the boot camp, is that we want you to be responsible as you're deploying these tools. It's very possible for people to behave irresponsibly. We see that all the time in the world today. There are all these problems that are a result of people who grew their companies and focused just on growth at the expense of everything else. The problem is that blitzscaling depends on the infrastructure of society. And if you harm that infrastructure, you're going to make it harder on yourself. And more importantly, you're basically taking from society and not giving back. The other point I like to make to entrepreneurs is that if you're responsible, that self-regulation is going to reduce the chances of punitive government regulation. Believe me, if Facebook had been more careful about regulating itself, or Uber had been more careful about regulating itself, they would not be facing the level of government scrutiny that they are today. Government isn't trying to screw companies. Government is not, especially in the United States, not anti-capitalist. But what it is pro-consumer. And if you are not being pro-consumer, if you're not behaving responsibility, they will be forced to act. And ultimately, it is a prerequisite for sustainable long-term value, right? If you're not able to be responsible, you're going to take down society with you. And that is going to be an ugly thing for you and for society as a whole. So responsibility is really important. The way you act responsibility is you decide how you're going to respond to a problem. Now, it doesn't mean that you have to take decisive action now. That's part of the lesson of ignore your customers. It doesn't always mean take decisive action now. You might take short-term action now, take a more permanent action later, basically put in some sort of temporary solution. Or you may just note the problem now, letting the fire burn and committing to action later. How do you choose between these? You ask yourself, what things, if I don't fix them now, will be impossible to fix at scale? That's something you have to act on. If it's difficult, but not impossible, you may have wiggle room. Or maybe you take short-term action and put a placeholder in place. But you're really thinking about the future. That's the key to blitzscaling, the future orientation and understanding what is going to be impossible to fix at scale. Now, a final note for those of you who are working in larger organizations. If I told you that there was a company with 11 billion in revenue, 17,000 employees, and a market cap of $20 billion, you'd probably think this is a pretty mature company. Probably most of its growth is behind it. I mean, wow, wouldn't it have been amazing to invest in the company when this was a startup? But, at this point, the story's probably played out. Well, this again is a real company. To be precise, it was Amazon in 2006, when a much skinnier, still with some hair, Jeff Bezos and Amazon launched what became Amazon Web Services. At the time, people didn't necessarily like this idea. They said, wow, we like Jeff Bezos, just mind the store. I mean, you're a great e-commerce play. Why on earth would you do this cloud computing stuff? It just doesn't make sense. Well, if you think about it, Amazon Web Services is probably responsible for a majority of Amazon's market capitalization at this point. It's an incredible, profitable business. It has a huge number of blitzscalable characteristics. It's a market leader. And without it, Amazon would not be nearly the company it is today. And that's the thing about being an established company, even a market leader. The way you stay on top is you continue to build great businesses. No business lasts forever. Everything has a cycle. Once upon a time, Apple made most of its money off of selling Macintosh computers. Today, Macs represent less than 10% of Apple's revenue base. You have to keep reinventing. You have to keep coming up with new businesses. And that's why blitzscaling remains relevant even to an established company, because you're going to need to take those new incipient businesses and scale them rapidly into market leaders. So that was a quick overview of blitzscaling. Just to recap, blitzscaling is something that you do to tackle a winner-take-most or winner-take-all market, where achieving that critical scale, being the market leader, conveys some sort of long-term competitive advantage. In order to do this, once you find a blitzscalable market, you're going to prioritize speed over efficiency. That's what's going to allow you to outpace the competition. And that you determine by looking at the blitzscaling growth factors and seeing, does it seem like this is a blitzscalable opportunity? If it is, you're going to have to navigate the phases of blitzscaling by taking into account those key transitions and being able to follow those counterintuitive rules while still being responsible. So with that, we are a little bit over the 45-minute mark. We still have about 12 minutes left for Q&A. I'm going to open it up for questions and answers. The MIT team is going to help moderate them, and Jeff Abbott, who is the co-founder and CEO of Global Scaling Academy, will also be able to help answer questions about the program as well. So thank you very much, everyone.
Awesome. And thank you, Chris, for this amazing presentation. It was super informative, and the stories you told and the examples you showed were really interesting. Let's just jump right into the Q&A now. So we have a few questions. So the first question, actually tied to your last point related to Amazon Web Services, is related to kind of the example you showed at the beginning, where maybe Amazon was more B2C and now Amazon Web Services is more B2B in some cases. So can you tell, the question here is related to potentially Amazon not being able to grow fast, or if there's more challenging growth in a B2B situation. Could you maybe talk more about that?
Absolutely. So it is in fact the case that B2B growth is typically slower. Not always, though. As we can see with Amazon Web Services, as we can see with Slack, it is certainly possible to blitzscale something that is a B2B offering if it has the right sorts of dynamics, the right sorts of network effects, the right sorts of distribution and virality, and so on and so forth. In the case of Amazon Web Services, by establishing a platform that was very popular with developers, Amazon was able to grow that very quickly by leveraging the sort of existing networks that tie together software developers. There's a lot of established channels there. And in the case of Slack, you have a very viral product. As people invite other people to Slack, they then choose to use Slack for other things. So it is certainly possible. But one of the important things to note about blitzscaling is that it is a relative, not absolute. So what do I mean? What do I mean by that? Well, I've just said that a lot of times blitzscaling companies double or triple in size every year. But doubling or tripling in size every year doesn't necessarily mean you're blitzscaling. It may be that you're in a market or industry where doubling in size every year, you're doubling in size every year, but your competitors are quadrupling in size every year. If that's the case, they're blitzscaling and you're not, because you're falling further and further behind. Conversely, it may be that you're growing your company at 50% a year, but your competition is growing it at 15% a year. And there you are blitzscaling, because again, you're opening up distance over the competitors. You're getting closer and closer to that critical mass that unlocks those competitive advantages. So you can absolutely blitzscale in the B2B world. You can blitzscale in almost any industry, provided there is a winner take most or winner take all dynamic, and you are able to find ways to grow faster than the competition.
Awesome. I think there's kind of a
Misty
similar,
agrees.
yeah, I think there's a similar follow-up question, but related to blitzscaling in heavily regulated industries such as healthcare, so hospitals, medical centers, where sales might have to go through an RFP process. Do you have any feedback or examples related to kind of that scenario?
Absolutely. So, there are oftentimes many things that will conspire to slow things down, right? So if you think about the process of getting a drug approved, by definition, the process of getting a drug approved just takes a long time. Right? There's no way, at least in the United States, to invent a new compound and get it. Hold on for a second. What's going on, Misty? Is there someone at the door? It's probably a delivery. Hi. Do I need to sign for it? You can just drop it off. I have to sign. I'm sorry. I don't know if there's anyone else in the house who can sign for it. Okay, great. Someone else is going to sign for it.
No problem.
Somebody had a signature required on the.
Yeah.
Why do people do that? So anyways, as I was getting back to it, talking about things like drug discovery, there are things where there are inherently long periods of time that it takes. But what you need to do if you're looking to blitzscale is to then say, well, where are there areas where I can dramatically speed things up? So for example, I'm aware of companies that are speeding up the drug discovery process by using computational power to simulate thousands of different trials at once in parallel. The individual trials are still ultimately, the approval is going to take the same period of time. But if you can find more potential candidates more quickly and spend a lot less money in the process, you can do that. I look at ag tech companies. Ag tech companies are bound by the cycle of the seasons, right? Ultimately, they have to prove their products in the field. But if they build, for example, a controlled environment where they can do A/B testing using robotic farms or something like that, or even vertical farms, greenhouses and the like, then you can dramatically accelerate the process of getting to the point where you put it into the field. So even if there are places where regulation or the dynamics of the industry itself mean that it's difficult to achieve a speed advantage, you can still find other parts of the process to achieve that speed advantage.
Awesome. So the next question from Fayez is related to essentially like IP and protecting your idea. So his question is, when approaching investors, how do you protect your idea when they invest in similar companies and can simply share the idea with them? Maybe one way to rephrase it is, as you scale your company, if you're blitzscaling, are there any best practices when it comes to IP that you can kind of talk about?
Absolutely. So this is a classic question that is a part of the venture industry for a long time. Even though typically most investors are going to behave ethically, it is absolutely the case that there are sometimes investors that behave unethically, that steal your ideas and provide them to others. I've had it happen to me in my own career as an entrepreneur, as a matter of fact. So I know it happens from firsthand experience. So there are a couple things you can do to protect yourself. The first is it is possible to go ahead and seek patent protection. I don't assume that patent protection is going to actually be definitive. And it can be troublesome as well, because if you have to defend a patent, it can cost money. There are all these things that are complicating factors. But I do think it is good practice to go ahead and seek real IP protection. Just don't count on it. The second thing is to just, at the end of the day, ask yourself, what is the greater risk? Is the greater risk that somebody tries to steal my idea, or is the greater risk that somebody is able to achieve market leadership before I am? And it really is a question of speed. If you were to go out and say, I'm going to try to raise money from venture capitalists, I will only talk with venture capitalists who sign an NDA, you will not be able to raise any money, because venture capitalists will not do so. And so you have to take a calculated risk and say, these investors have the reputation of being ethical investors. And as a result, I'm going to take the risk of sharing my idea with them in case they decide to invest and help accelerate the progress of the company. And again, what I would recommend you do as an entrepreneur is to due diligence your investors by doing reference checks. And my number one secret for reference checking an investor is to find an entrepreneur who started a company that they invested in that failed. Talk to that entrepreneur. If you talk to the failed company entrepreneur, that'll give you a real sense of how someone behaves when times are tough. And if they behave well when times are tough, my guess is you can trust them.
Great. So the next question is from Samir, and he says, can you talk a bit more about Airbnb? In his question, he says, they seem to have scaled very quickly, but as they've grown, the quality of their product has suffered. I wonder if you have any thoughts on that.
Yeah, so I'm not an active Airbnb customer. I occasionally stay in an Airbnb, but usually somebody else books it for me. So I'm not qualified to comment on whether the product has gotten worse or not. But I will say that it is true that sometimes greater scale can reduce product quality, and sometimes that's an intentional strategy. When it comes to product quality, as I mentioned, achieving the best possible product is not necessarily the most important thing. The most important thing in the case of a business like Airbnb is the product perfect, but it's rather, is this product the best place for me to get that place to stay that I want to stay? Or as a host, is this the best place for me to find guests to fill my spaces in order to generate revenues for me? And if you look at a product like Craigslist, which I would argue is a pretty bad product in many ways, as long as it has that dominant position, it will succeed. Now, it is possible to make a product that is so bad that people will eventually abandon you. And if you look at the example of MySpace being replaced by Facebook, that's a clear example of MySpace just being ultimately unusable by most people and Facebook being able to take over. Same for MySpace, ironically enough, replacing Friendster because of technological difficulties. So I would say that if you are blitzscaling, there are times when you may choose to intentionally sacrifice some product quality in order to achieve greater scale, because your goal is to lock in that enduring market leadership.
Cool. So the next question is related to kind of going from tribe to city in the scale up, the blitzscaling stage. Do you have any preference when it comes to using any kind of, scale up methodology or startup methodology, whether it's, using the lean startup approach or using Peter Thiel's 0 to 1 approach? Like, do you have any thoughts on that?
So I think that both of those are good approaches. And I know I knew Peter back when he was at Stanford a long time ago, and Eric Ries is a friend of mine as well. So I think that they both do a good job of laying out contrasting points of view. And obviously both of them are successful. So it is absolutely the case. There are many different paths to success. I would say that the most important thing in evaluating these frameworks from the lens of blitzscaling is to ask yourself, how is this allowing me to get to that next stage faster? How is this allowing me to get closer to that enduring market leadership position that generates the competitive advantages? Because that's really the advantage. When it comes to 0 to 1, it's find a market which other people disagree with. You be the contrarian who's right. That gives you the space in order to get to that critical market, critical mass before everyone else does. Or in lean startup, iterate with a minimum viable product so you can iterate faster. And in many ways, and this is the whole point of launch a product that embarrasses you, the more market feedback you have, the quicker you're going to get to the good enough product that allows you to grow. So evaluate those kinds of frameworks through the framework of speed and critical mass.
Awesome. So I think we're about to run up on time, and I know that there's a lot of questions left. But
it's a good thing there's a boot camp with a couple of days that'll cover this.
Yeah, absolutely. So I think for anyone who kind of submitted a question, please feel free to email those questions to us, and perhaps we can address those in the next webinar. But I just wanted to kind of thank Chris and Abbott, Chris and Jeff for joining us today and sharing this really great talk. I think just by the number of questions, everyone's really engaged with this this conversation, and I think it's really exciting to be able to collaborate with the Global Scaling Academy on the first Venture Scaling Bootcamp here at MIT. So yeah, thanks a lot for joining us today.
Thank you, everyone. A huge pleasure. I hope to be seeing you in person without my crutches in September.
Awesome. Well, thank you everyone for tuning in today, and join us on the next webinar and apply to the Venture Scaling Bootcamp to learn more. Have a great day, everyone.